Imagine this, you buy 1 crore rupee flat in Bangalore thinking no problem, I'll rent it out and cover my EMI. But when the rent comes, it's just 25,000 rupees a month. Meanwhile, your EMI is around 60,000 rupees. Suddenly, you realize the numbers don't match, and that brings us to a big question. Is rental yield in Bangalore really worth it, or it's just a trap? In cities like Bangalore, Mumbai and Hyderabad, rent have indeed shoot up in the last 3 years. Tenants are paying heavy amount of rentals. But when you compare it to the cost of buying to the rental yield, to calculate the rental yield, your total month of a rent multiply by 12 and divide that with the property value. And when you calculate that, your rental yield is still lesser, hardly 3 to 4% per year. That means if you bought a 1 crore rupees flat, you're hardly making 3 to 4 lakh rupees as a rent per year. Now you compare your rentals with a fixed deposit, which is 5 to 7%, or even with a stock market, which is 10 to 11%. When investor is getting better returns into a stock market, let's understand why somebody is investing into the Bangalore real estate. Let's break it down. First and foremost, let's discuss about opportunity. The first reason is demand. Bangalore is India's startup and IT hub. Lakhs of people migrate to Bangalore for jobs. That means vacancy risk of apartment is low. Even if your rent is not very high, your property won't sit idle. Second opportunity, what I see, rising rents after the COVIDs. Rent are rising faster than the salaries. In 2021 to 2023, many areas saw 30 to 40% rent hikes. For example, a flat which you were paying 25,000 rupees rental in 2021 today is costing you anywhere between 40 to 45,000 a year. While the yield looks smaller on a paper, the cash flow is gradually increasing. And third, investor look out capital appreciation. Imagine a 1 crore property becoming 1.8 crore in 7 years, matter far more than a few lakh of a rent every year. I would say rent is just a bonus. Capital appreciation is the real game. Let's talk about the challenges. The first challenge is simple. Your EMI will be always much higher than your rent. Unless you pay heavy down payment, you will be negative cash flow for years. That means you can't rely on the rent to cover your loan EMI. Second challenge is the hidden cost. Maintenance fees in gated community, property taxes, brokerage every time you change new tenants. Together they eat up 1 or 2 months of a rent every year. Your yield reduces even further. Third challenge, when you look at pure percentage return in real estate rental yields, it looks really smaller compared to equities, mutual funds, or even with the government bonds. Rental yield, which is 3 to 4% versus 7 to 10%, will looks much more smaller compared to the stock market and equities. That's why if you are expecting high rental income, you will be disappointed. So here is my straight answer. Trust me, if you're buying property only for rental yield, it's not worth it in Bangalore. The number don't justify it. Rent typically helps you part of your EMI, keeps your property active, and it helps you grow your property gradually over a time. In short, rental yield is not the hero of Bangalore real estate, it's the side character. The real hero is capital appreciation. So, is rental yield in Bangalore worth it? The answer is only if you see as a bonus, not the main meal. Now, tell me in the comments, if you were investing today, would you buy a property for rental income or purely for capital appreciation? And if you found this breakdown helpful to you, like and subscribe. And if you want consultation, connect with us.